Welcome to the Deep Dive. We're here to help you cut through the noise and really get to grips with what's going on. You've probably seen the headlines about SUI cryptocurrency lately. Lots of buzz, especially around those pretty dramatic price swings and all the talk about token unlocks. It's been, well, a bit of a roller coaster.
It certainly has, yeah. A lot of chatter, different headlines pointing in different directions sometimes. So our mission today is really to give you a clear picture of SUI, what's driving its recent price moves, what's the real impact of these token unlocks, and maybe most importantly, what do its underlying economic principles, the tokenomics, actually mean for where it's headed?
Exactly. That's the goal. We've dug through a whole stack of sources for you. Everything from, the quick takes from Crypto Daily and Bankless Times, to 2L market views from CoinCodex, CoinMarketCap, Markets.com, and even the official SUI tokenomics documentation itself. By the end of this deep dive, you should have a much clearer view of SUI's current situation, the technical stuff influencing it, and crucially, the fundamental design that shapes its long-term potential.
Okay, let's unpack this. So to really get the SUI story, we have to start with that big event, the one that really sent ripples through the market, those massive token unlocks. Crypto Daily reported a pretty significant one, $128 million worth of SUI unlocked on August 2nd, 2025. And that apparently triggered a sharp 10% price drop.
Right, but then Bankless Times actually reported an even larger release the day before, August 1st. They cited 76.27 million SUI tokens, valued at something like $210.41 million. And according to them, that led to a much bigger plunge, 23% down from its late July highs. So different numbers, but same downward trend.
Wow, 23%. Okay, so these unlocks, where tokens that were locked up suddenly become available, they definitely caused some waves.
Oh, absolutely. If you were watching the charts, you saw SUI bouncing around quite a bit. Crypto Daily noted it fluctuating between $3.75 and $4.67. They mentioned a 13% slip over the past week, although interestingly still up 18% over the last month. So context matters there.
Right. And Bankless Times had the price around $3.45 on August 1st, while CoinCodex, reporting on the 2nd, showed it at $3.37. The immediate hit was definitely real.
Yeah, palpable is a good word for it.
It really feels like this unlock anxiety is a genuine thing in the crypto space, doesn't it? Bankless Times pointed out that SUI unlocks specifically often lead to these short-term dips. As the early investors, the ones who got in cheap, decide to take some profit off the table.
Exactly. And it wasn't just SUI feeling the heat in isolation. CoinMarketCap highlighted that SUI actually led all projects for August token unlocks with that $167.62 million figure they cited. So that definitely adds to the broader market concern about supply hitting the market.
That's a big chunk leading the pack.
It is. Though, interestingly, CoinMarketCap also noted that total crypto unlocks across the whole market actually dropped significantly in August, like down 52% from a huge $6.3 billion in July to maybe $3 billion in August. So SUI was the big unlock for August, but the overall unlock pressure was less than the month before.
Okay, that's a really important piece of context. Fewer unlocks overall, but SUI's was substantial. And speaking of context, CoinMarketCap also mentioned something interesting, kind of a counterpoint. The CEO of Polymath suggested investors might be maturing a bit, moving beyond just knee-jerk unlock anxiety and looking more at the project's core token economics and governance. What does that tell you? Does that ring true?
I think that's a really insightful point. It suggests the market might be evolving, right? Where these short-term supply shocks, yeah, they cause volatility, maybe big swings. But the more sophisticated investors, they're increasingly trying to look past that immediate noise. For you listening, it means digging into the project's actual value proposition. The tokenomics we'll get into, the community strength, the tech roadmap. Stuff becomes way more important for long-term conviction than just reacting to when tokens unlock.
That makes a lot of sense. So, okay, prices were dropping, anxiety was high, but what was actually happening on the SUI network itself? Was it all just selling?
Well, the data certainly points towards intensified distribution, yeah. Bankless Times reported SUI's 24-hour trading volume jumped almost 39% to $2.26 billion. That's often a sign of increased selling activity, people moving tokens.
Right. More volume, more movement.
And Difflama data backed that up too. They showed a drop of nearly 5% in SUI's total value locked, the TVL. That's the amount staked in its DeFi protocols. It fell to $2.53 billion. So less participation in DeFi, which kind of mirrors the sell-offs.
Okay, so selling pressure, volume spike, DeFi participation dipping. But it wasn't all negative news, was it? Bankless Times mentioned something potentially bullish.
Oh, yeah, the Mill City Ventures announcement. They announced a $500 million equity line specifically for their publicly traded SUI treasury strategy.
$500 million. That sounds like a potentially significant injection of fresh capital, right?
It absolutely is, and it's a good counterpoint to the immediate bearish sentiment. It signals, institutional interest and maybe potential for longer-term growth, even with this short-term price pressure.
Okay, so we've seen the immediate market reaction, the unlock effect, but let's dig into the charts and numbers now, the cold, hard technicals. What are they telling us about where SUI might be headed beyond just the unlock noise? Are there deeper trends?
Good question. Yeah, looking at the technical indicators, the short-term picture is, pretty cautious. Crypto Daily noted SUI's RSI, the Relative Strength Index, is below 50. Now, for anyone unfamiliar, RSI measures momentum. Below 50 generally means sellers have the upper hand over buyers.
Okay, so more selling momentum indicated there.
Exactly. And Bankless Times had a specific number, 48.5 for the RSI. That suggests there's still potentially room for the price to fall further before it hits a technically oversold levels, which sometimes signals a potential bounce.
Right, not quite at the bottom according to that indicator. And what about other key things traders watch, like the MCD or moving averages? Same story.
Pretty much echoes that sentiment, yeah. Bankless Times pointed out the MACD histogram, that's the moving average, convergence, divergence, another momentum tool flip negative. It was at NAJA 0.0556, signaling increasing bearish divergence. Basically, downward pressure is strengthening.
Got it. Bearish signal stacking up.
And then the moving averages. SUI's price broke below its 50-day moving average, which was sitting around $3.90. And at the time of recording, it was testing the 200-day moving average right around $3.52. These are levels traders watch closely for support or, if broken, further downside.
Okay, so if that selling pressure does continue, what are the key price levels people should be aware of? Potential support zones or further drop points? And conversely, what needs to happen for things to turn around?
Right. So on the downside, Bankless Times noted the price already fell below $3.55, which was a key 50% Fibonacci retracement level. Fibonacci levels are based on past price swings and often act as support or resistance. The near-term support they identified was $3.34. That's the 61.8% Fib level. The next major target below that would be $3.30, the 78.6% level. And crypto trader CW also flagged $3.30 as a key support to watch.
So $3.34 is kind of the immediate floor to watch?
Seems like it. If the bears really push it, psychological levels like $2.80, maybe even $2.50 could come into play.
And the upside, if things somehow reverse.
Well, Crypto Daily pointed to the strongest resistance being up at $5. If it could break through that, they saw potential for a rise to $5.91, which would be, over a 25% increase from current levels. But that feels a bit distant right now.
Yeah, especially given those short-term forecasts from CoinCodex. As of August 2nd, 2025, they were pretty stark, weren't they? Even though the overall crypto fear and greed index showed greed at 55, their sentiment for SUI specifically was just bearish.
Very bearish, yeah. They predicted the price could drop by over 25% to $2.52 by September 1st.
It's quite a specific and significant drop forecast.
It really paints a picture of continued pressure in the near term.
It does. Their 5-day outlook showed maybe a brief peak around $3.37 on August 3rd, but then dropping down towards $2.58 by August 7th. And looking at a month, that prediction held down about 25% to $2.52 by September 1st. So yeah, a pretty consistent bearish view for the next few weeks.
But it's crypto. There's always potential for a turnaround, sometimes unexpectedly, right? Bankless Times mentioned that trader Ali, who spotted a symmetrical triangle breakout on SUI's daily chart, with a pretty ambitious target of $8. That's true. These patterns can indicate potential large moves. Of course, as Bankless Times noted, the recent unlock definitely threw a wrench in that bullish setup, or at least delayed it significantly.
So what would need to happen technically for that $8 target, or just a general bullish reversal to even seem possible again?
For Ali's scenario, or any real bullish revival, SUI would first need to convincingly reclaim the $4 level, get back above that, and then, critically, break past the resistance around $4.60. Until those things happen, the short-term bearish pressure we've been discussing is likely to remain the dominant factor.
Okay. These short-term swings, the technicals, they can feel a bit chaotic, but to really understand SUI's potential or its risks, we need to look deeper, right? Under the hood at its economic engine. It's tokenomics. Let's unpack that. For anyone new to the term, tokenomics is just token plus economics. It describes how a blockchain's whole economy is designed to work. Supply, demand, utility, the whole blueprint.
Precisely. It's the core rulebook for the token. And the SUI, coin-capitalized SUI, distinct from the SUI network, it has 4 key jobs according to their own documentation. First, and this is fundamental for security, you can stake SUI. You lock it up to participate in the proof-of-stake system. That's how the network stays secure and processes transactions. Validators stake SUI.
Right, staking for security. But it's also needed for using the network day to day, isn't it? Like transaction fees.
Absolutely. That's the second key function. SUI is the asset you use to pay for gas fees, the cost of computation and storage for your transactions on the network. Third, it's designed as a versatile asset within the SUI ecosystem. Think unit of account, medium exchange, store of value. This allows for really complex smart contracts and interactions.
So it powers the internal economy.
Exactly. And fourth, SUI coins are crucial for governance. Holders can use their SUI to vote on important things like protocol upgrades and the future direction of the network.
And this all ties into that proof-of-stake mechanism. Validators lock up SUI as collateral, they process transactions, they earn rewards. And importantly for you as a user, you can actually delegate your SUI to these validators. You don't have to run a validator yourself, but you can still participate and earn rewards proportionally.
Right. And it's designed to be fairly flexible. Users can withdraw their stake or even switch which validator they're delegating to when an epoch changes. An epoch on SUI is basically a 24-hour cycle.
Okay, so staking, gas, internal asset, governance. What about the supply side? How many SUI tokens are there and how do they get released?
The total supply is capped at 10 billion SUI. That's the maximum that will ever exist. But, and this is critical, that 10 billion isn't all available right now. It's subject to these carefully planned unlocking schedules. They're built right into the network's design to ensure stability, especially early on, and long-term security. Avoids just flooding the market.
And this connects directly back to that unlock anxiety and the price drops we talked about earlier, right? These schedules are the source of those unlocks.
Exactly. SUI's tokenomics include different vesting schedules for different groups. For instance, when the mainnet launched, there was a 1-year cliff period that just ended back in May 2024. During that year, early investors couldn't just dump their initial SUI allocation onto the market. It was a deliberate move to protect the network's stability in its early days.
That focus on stability also explains why they chose not to do any airdrops when the mainnet launched, correct? That was a conscious decision.
A very intentional one, yes. They stated a few reasons. One was to avoid attracting bad actors, just looking for a quick flip during the launch hype. Another was to sidestep potential legal and tax complications, as airdrops can be tricky depending on where you live. But fundamentally, it signaled they were focused on long-term sustainable success, rather than just generating short-term buzz or a speculative pump through free tokens.
That definitely sends a message about their priorities. Now let's talk about something really unique in SUI's tokenomics, the storage fund. What's that all about?
The storage fund. This is actually a really clever piece of economic design. It tackles a long-standing problem in blockchains. How do you compensate future node operators or validators for storing all the historical data created by past users?
Right, because the chain just keeps growing.
Exactly. So the way it works on SUI is that every transaction that writes new data to the blockchain includes a storage fee. That fee doesn't go to current validators directly. It goes into this special storage fund. Then the fund itself stakes the SUI it holds within the network's proof-of-stake system, and it earns staking rewards just like any other staker.
Okay, so the fund collects fees and then stakes them.
Right. And then the rewards earned by the fund are distributed to the current set of validators. This compensates them for the cost of storing all that historical data.
So it's like past users are paying via the fund's staking rewards for future validators to store their data. That sounds remarkably sustainable.
It's designed to be. It shifts the cost across time, essentially. A few key things about it. The fund is backed by past transactions. It pays out only its returns, the staking rewards, not the principal amount collected in fees, so the fund itself doesn't shrink. There's even an option to get a partial refund if data is deleted from the chain.
Okay, but what's the big economic implication here? How does this affect the SUI token itself?
This is the really interesting part. Because the total supply of SUI is capped at 10 billion, and because network activity leads to more data storage, this fund tends to grow over time as more fees are collected. As the fund grows and stakes more SUI, it effectively takes more SUI out of active circulation. This creates a deflationary pressure on the token supply.
So more usage could mean less circulating supply over time because it's locked in the storage fund.
Potentially, yes. It contributes to making SUI potentially a better store of value and encourages long-term investment, as increased usage could lead to increased scarcity. It's a built-in deflationary mechanism tied to network growth.
That's fascinating. And you mentioned validator rewards earlier. Is there anything unique about how those are handled beyond the storage fund compensation?
Yeah, it's also different from some traditional proof-of-stake chains. On SUI, honest validators who are doing their job receive their staking rewards with essentially full certainty. It's based directly on their amount of stake. It removes the element of randomness you sometimes see where rewards depend on, say, proposing the next block.
So it's more predictable for validators.
More predictable, yes. Each validator runs a staking pool. When you delegate SUI, it sort of converts internally into liquidity tokens tracked by an exchange rate. As the pool earns rewards, the value of those tokens goes up. And importantly, all the SUI in the pool, whether it's newly staked or rewards earned, immediately starts compounding. It's quite efficient for stakers.
And they're also changing how validators qualify, moving away from just needing a huge pile of SUI, something about SIP 39.
Right, that's a recent governance proposal, SIP 39. They're transitioning to a minimum voting power requirement instead of a fixed SUI amount. The goal is to lower the barrier to entry and encourage more decentralization.
Makes sense. So what are the new rules?
The proposal sets it at needing 3 voting power units to join the active validator set. If a validator drops below 2 voting power, they get a grace period of 7 epochs, so 7 days to get back up. If they fall below 1 voting power, they're removed.
Okay, but what does voting power mean in terms of actual SUI?
It depends on the total amount staked across the network. They gave an example. If there's 7.69 billion SUI staked network-wide, then having about 2.31 million SUI would give a validator candidate those 3 voting power units needed to join. So it's still a significant amount, but it's relative to the total stake, not just an arbitrary fixed number, making it potentially more accessible as the network grows.
Okay, so we've gone deep into the tokenomics, the unlocks, the technicals. But as you said, no crypto project exists in a bubble.
Exactly. And it's crucial to remember that SUI's price isn't just about those charts and internal mechanics. Markets.com rightly points out several broader factors that are really shaping its path.
That's so true. It's easy to get lost in the weeds. But ultimately, long-term success hinges on stuff like actual adoption and real-world use cases, right? Like, are developers actually building useful things on SUI? Are people using dApps in finance, gaming, supply chain? That's where demand comes from.
Absolutely critical. And tied to that is technological advancement. Is SUI continuing to improve? Better scalability, tighter security, a smoother user experience. These kinds of ongoing improvements are vital to stay competitive and attract both developers and users, which feeds back into value.
And then there's the whole whirlwind of market sentiment. Crypto is so driven by narrative, isn't it? Public perception, news cycles, social media buzz, even things like major partnerships or successful upgrades can dramatically shift how people feel about a project like SUI. And bad news travels fast too.
It really does.
Yeah.
Which brings us to the regulatory landscape. That's a huge factor for the whole industry. Clear, sensible regulations could open doors to wider adoption, maybe more institutional money, but uncertainty or, worse, restrictive measures can definitely put the brakes on growth. It's a constant variable.
And you can't ignore the competition. SUI is playing in a very crowded field with lots of other layer 1 blockchains. Its ability to stand out, to offer something unique or better, is absolutely key for grabbing market share.
Definitely. And Markets.com also touched on community engagement. Having a strong, active community developers, users, supporters is often essential for that long-term health. They contribute, they promote, they build the ecosystem.
Plus, you've got the wider economic climate. Things like inflation, interest rates, general market booms or busts. They all influence how much risk investors are willing to take, especially in crypto.
And while SUI clearly has an ambitious long-term vision aiming to be a top platform for dApps, which helps build confidence, it still faces real hurdles. There are always technological challenges to overcome, that intense competition we mentioned, and the ever-present potential for regulatory roadblocks. How effectively they navigate these will be key.
So pulling all this together, it leads to some really fascinating long-term price predictions from CoinCodex, again, as of August 2nd, 2025. What's striking is, after all that short-term bearishness we discussed, their long-term view, like 2026 out to 2030, is actually quite bullish.
It's a really stark contrast, isn't it? Their forecasts suggested potential highs like $9.27 in 2026, then maybe a dip to $6.21 in 2027, $4.90 in 2028, but then rebounding strongly to $8.61 in 2029 and hitting $14.41 by 2030.
$14 by 2030, and they even look further out.
Yeah, way out. The forecast suggested prices could potentially reach nearly $100 by 2050. Now, obviously, take long-range crypto predictions with a huge grain of salt. But the contrast is the interesting part. It really highlights that fundamental tension in crypto investing. You have the immediate market psychology, often driven by fear, events like unlocks, versus the long-term potential that's hopefully anchored in the project's actual design, its fundamentals, its tokenomics.
So for SUI, things like that deflationary storage fund, the efficient staking, the focus on developers, that's the foundation for that long-term bullish case if they execute and get adoption.
Exactly. It hinges on whether those strong tokenomics can translate into a thriving ecosystem over time, overcoming the short-term noise.
Wow. Okay, what a journey we've been on today. We've really taken a deep dive into SUI, haven't we? Starting with the immediate shockwaves from those token unlocks, the short-term price volatility, then digging into the nitty-gritty of its tokenomics, like that really innovative storage fund and the validator system. And finally, zooming out to look at the broader market forces and ecosystem factors that will ultimately shape its future.
Yeah, it's clear SUI is navigating a pretty complex path right now, trying to balance those immediate market pressures and reactions against its own underlying long-term economic design.
And we've really seen how pronounced that contrast can be. Unlocks, driving prices down short-term, technical indicators looking weak.
But then the core tokenomics, the potential for real ecosystem growth, suggesting a potentially very different story down the road.
So you've now seen how one event, like a token unlock, can create these immediate ripples, maybe even waves, while the fundamental economic design and those bigger market forces might point towards completely different long-term outcomes. It makes you think. Given these often conflicting signals, short-term bearishness versus long-term bullish predictions driven by fundamentals like tokenomics and ecosystem potential, what aspect of a project's core design or strategy do you think becomes the most critical thing to understand, especially when the market gets really volatile like this? Something to mull over.